Sharks smell blood in the water, and today, that blood is Bitcoin's price drop under $103K. Let's dive into why the king of crypto just took a tumble. The trigger? Escalating tensions between Israel and Iran. Whenever global conflict heats up, risk assets get chilly, and cryptos no exception. Over $1.1 billion in leveraged crypto positions were liquidated as Bitcoin slipped below $103K, caught in a wave of risk-off sentiment. That's a flash freeze if ever I saw one. BTC slid faster than a fish on ice. Searching the charts today, we see volume spikes that show panic selling sweeping through the market. Bitcoin's correlation with safe havens like gold just spiked. Traders are seeking shelter wherever they can. The Bitcoin Volatility Index just hit a multi-month high, so buckle up, this ride isn't over. Watch for major liquidation clusters around $100K. If that breaks, expect more fireworks. Conflicts kill conviction, but remember, sharks thrive in choppy waters. This could be a setup. Now, let's talk about a jaw-dropping $100 million bet. DRW has officially backed Trump's crypto dreams. DRW, a major US trading firm, just dropped serious capital into Trump Media and Technology Group's blockchain project. The news broke this morning. $100 million earmarked to fuel what might become the populist token of the decade. Whoa, that's not just a ripple, it's a tidal wave. Institutional capital entering voice of the masses crypto is wild. With SEC pressure cooling off and more regulatory clarity post-FTX, projects like this are creeping back into the spotlight. Trump's built-in audience is massive now. Combine that with DRW's liquidity, and you've got serious launch velocity. But of course, political tokens bring political risk. These waves come with fins. DRW's strategy now is likely to push listings, build hype, and lay the groundwork for a 2025 surge. I see this as a risk-on bet with flashier PR, but only time will tell if it becomes a blue chip or a bubble. Meanwhile, Bitcoin miners are making it rain. Q1 earnings just came in, and they're off the charts. JP Morgan's report shows record-breaking profits for top players like Marathon and Iris Energy. That's what I call a buffet for miners, cake and cash everywhere. Lower energy costs and high BTC prices mean margins are peaking. Mara and Iren posted all-time highs in BTC production. Their stock prices jumped 15 to 20% post-earnings. Clearly, Wall Street's still hungry. The combination of lean operations and BTC's resilience is turning mining into a goldmine again. But keep your eyes on energy prices and difficulty adjustments, because if those creep up, the tide can turn. A rising tide lifts all boats, but make sure your miner isn't filling that boat with leaks. While miners are celebrating, macro traders are eyeing next week's Fed meeting. Bitcoin has stabilized just above $103K after yesterday's drop, but the real move might come with the FOMC. The market's now pricing in a more patient Fed. After cooling inflation data, CPI and PPI both came in softer, and you can already feel the optimism charts are forming V-shapes, signaling possible reversals. Traders are now targeting a short-term rally toward $105K. Even smaller altcoins like Solexy are catching a bid. The mood? Cautiously bullish. The real test comes when the Fed speaks. If Powell hints at a dovish pivot, BTC could blast off. But if the tone's hawkish, get ready for more turbulence. My gut says patience wins, but never trust the calm before a storm in shark waters. Finally, let's talk Ethereum. It's finally showing signs of life. Today, ETH jumped nearly 5%, powered by a surge in stablecoin activity. Stablecoin issuers like Circle are minting heavily on Ethereum again, and it's bringing DeFi volume with it. Look at the charts. Gas fees are rising slightly, but so is TVL. This isn't just noise, this is real usage. The recent Pectra upgrade drastically boosted throughput, making Ethereum far more usable. ETH has actually outperformed Bitcoin this week, which is rare in a macro down cycle. Tokenization, real-world assets, stablecoins. Ethereum is sitting right in the middle of all of it. Watch gas fees and stablecoin volume closely, those are the lifelines. ETH is flexing again, and this might just be the first bite of a bigger run. That's it for today's crypto breakdown. Tension-triggered dips, a $100 million Trump bet, miners making bank, the Fed lurking, and Ethereum on the rebound. Which wave are you riding? Let me know in the comments. Hit that like button and subscribe unless you're shorting this channel. See you next time.